What is up, guys? How's everybody doing? We have had another wild week of trading, whole lot of chop. So if you hung in there, good on you. We're going to be talking about some really useful stuff today. I'm going to give people just a little bit of time to filter in here, just a minute or two. But we're going to be talking about gamma exposure, what that is, first off, how we can use it to trade, and what it actually means in terms of market mechanics and market structure. So very useful stuff that a lot of people don't talk about too much. I feel like it's just starting to hit the mainstream. I don't know if anybody remembers maybe 2 3 years ago. 2 3 years ago, everybody all of a sudden was super into ICT, inner circle trading lingo, and everything was a fair value gap or a buy side imbalance. And I'm just noticing that kind of happening now with gamma trading. And this is not a new thing, but I think it's great that retail is starting to learn more about it, and we're gonna be talking about that. Hey, welcome, welcome, welcome. Good to see you in here. We are doing a webinar on gamma exposure real quick, just letting people come on in. So yeah, wild week, a lot of chop. I think we're basically being box traded by two large entities. One selling the 6900, one buying the, I don't know, 6700, something like that. Think we started to see the sellers step out of the way today, but heavy price action, consolidation after the initial pop. I'm still bullish, but man, it's a little tricky this week, wasn't it? Let's see. Does trade the pool allow trading in options? No, no options trading, but I think it's actually a good thing. You get all of the benefits of options. You get the leverage, which is the whole point of a prop trading firm. I have access to $25,000 in these accounts, and so I don't need to play with instruments that can hurt me more more than others. I do trade options. Don't get me wrong. I love options, but I think that for anybody trying to do this for a career, like do this as income generation, in a sustainable way, I used to recommend futures until I started trading with Trade the Pool, and now I get to trade all my fun individual names, but with the same risk tolerance as how I used to trade futures. Essentially, I don't have to worry about Greeks. I don't have to worry about theta. I don't have to worry about gamma. I don't have to worry about any of that. I just know where my levels are and I play level to level. So no options, but leverage, amazing. Same thing, right? What we like about options is the leverage. So it's a good thing. Hey, Todd, good to see you, brother. How's your week been? Hey, TB Holding. Usually the same traders. Yeah, absolutely. Just big market participants. We're all human. We like to personify things in ways we get it. There's the good guy who's buying at my support. There's the bad guy selling. Probably the same entity trading hands. Who knows? Different institutions. What's the difference, right? All we know is it's big money, and we gotta follow those footprints. Options traders got a treat this week. Not if you're me. I did well on quick scalps, and my swings just kind of withered away a little bit. I think they'll bounce back, but been a big been a big day or week of making my money in the morning, dribbling back half the gains on the swings as market chops out. Next morning, I sell some more, do the same thing. Bit frustrating for me, but if you're fast on the trigger, really good week for scalping. All right, guys, we got some people in here. We're ready to start. Let's see. Real quick, let's just go through the comments here. TB Holding saying he's looking for the market to continue up in trend until after Christmas. Absolutely. So we're talking gamma exposure, so we'll link it all together here. We have a massive gamma wall up at 700, 7,000 SPX or SPX/ES, right around there. I believe it's actually SPX. Regardless, big level up there. I do not see us pushing significantly above that yet, until we get there and see more gamma exposure building out above it. Right now, the biggest node is up there. We are in positive gamma on the month, and that means that we are, well, you know what? You'll learn what that means as we go on here. Let's see. Oh, you guys are playing Tesla? Yeah, I saw the crazy flow on what, the 550s or something for January. I wonder how those are doing. Definitely like the chart. We're a fan. Okay. All right, guys, I think we're all caught up. Market was crazy this week. What do you guys think next week? 700? I hope so. 690 is going to be a big gamma wall. We're going to talk about that. If we can flip that and the next week's expiry shows a large building of gamma exposure at the 700, then it is in the cards for me in terms of where I see the market being able to reach. Do we get it? I'll find out next week on Dragon Ball Z. We got to see. The market is Maybe other people have a better read on it than me, but I'm not getting shaken out, but it's just testing my patience. There was a few gut checks this week. Those big knives, the one, what was it, yesterday? Oh, this week's going crazy. Anyways, let's get into it, guys. Thanks for putting up with my rambling. Let's put some stuff up on the screen. Boom. So, introduction to gamma exposure. That's what we're talking about. And more specifically, how we can use GEX profiles, gamma exposure profiles, to day trade. I know you guys, I know my audience, I know my target addressable market. You guys like making money fast. You like the intraday trades. I do too. And anything we can do to get a little bit of an edge there, it's going to really pay dividends going on because, scalpers, we take direct moves, we take quick moves, and the more information we have to hone that edge, the better. So let's go, baby. Right on into it. Here's what we're going to learn today. We're going to talk about what gamma exposure is. It's this hidden mechanic, and it creates supports and resistances that you might not notice otherwise. They are dynamic, so they change intraday. So it's important to keep track of them. But also, you can look at the larger time frame gamma exposure profiles for inference on swing trades. So it's not just an intraday tool. I just know you guys, and I know me. This is how I use it most. So we're going to talk about all that. We're going to talk about how dealers move markets and why market makers will push price up to specific levels or down to specific levels. We're going to be talking about reading these GEX charts. How do we interpret this data? How do we interpret these different regimes, whether we're in a positive regime or a negative regime? I know you don't know what that means yet. That's okay. We're going to talk about it. It's actually really intuitive once you get a handle on it. And that's why I wanted to bring this to you guys, because I feel like it's just kind of hidden knowledge. And that's what we're all about here at Trade the Pool. We're trying to get you guys into some institutional level analysis and tools, but basically give retail a shot here against the big boys. So going to be going over that positive and negative gamma like we talked about. We're going to be going over some key points on a gamma chart and how you can trade those intraday. So that'll be around the 0 gamma level, that gamma flip level, the max strike levels, and everything in between. So I don't think we're going to get to it today because it's going to take a little bit to work through this. I want to really make sure we understand the concepts, but probably next webinar, we're going to be getting into specific strategies, really nitty gritty with lots of chart examples. We'll see how much time we have. But after that, we are going to be talking about how we can kind of just package this as a complete framework for you to kind of conceptualize what's going on under the hood in the markets. So boom, let's get into it. What is the hidden edge of gamma? So most traders, day traders, they have a few tools in their toolbox, right? We got support and resistance. Everybody's looking at these. You got moving averages, a little bit lagging, but you know what? The point is everybody's looking at them. So that's a dual-edged sword, right? It means that everybody has that as a reference point. Those levels will be respected to some degree or another. It also means that maybe there's something else going on under the hood that is more important in certain trading situations than these more static levels that everybody's looking at. Maybe if we had a look under the hood and we could see what is driving price action, we could have we could have more data to infer where price might go next. So volume analysis, another tool in most day traders' toolbox. I am not talking down on volume analysis. I'm a big volume guy, but that also shows what happened. It didn't show what's going to happen. I mean, we can infer what's going to happen, large volume into a key level. We can infer that if it continues through, we're probably punching it. If we reject there on high volume, well, we put a lot of effort in, we didn't get a lot of result. We can probably infer that it's going down. That being said, still not a leading indicator. I posit to you guys that if there is a leading indicator, it is gamma exposure. Let's talk about it. So the problem, like I said, with these other things we talked about, everybody's looking at the same thing. And, it's kind of like, what is that? What's that old Pixar movie? It's like, if everybody's a superhero, nobody is. If everybody has the same data right in front of them, where's your edge? I mean, maybe you're just a killer. Maybe you're just out trading these guys, and all the more power to you. But, I like to set up my system where I don't need to be the best executor in the world to make consistent profits. I just want to make the consistent profits in the least stressful way possible. And often knife's edge, trading people under the table. It's tricky. It's a little easier if you kind of have an idea of where the where the market's going to go. And I always say that it's kind of like the difference between kiddie soccer in the big leagues. When you're watching your kids run around play soccer, they're all just running right at the ball. No matter where the ball is, they're running right directly for it. And you get a few years under your belt, you learn a little more, and you start trying to position yourself to where the ball is going to be, not where it is right now. And that's kind of what we're trying to get into the headspace of here. So the solution: gamma exposure. This is a mechanical force. This is not some wishy-washy, some esoteric ICT concept that, so we're doing a 10 abbreviations to, gauge market movement in the past rolling periods. It gets so esoteric. This is something that's very concrete, and it just makes sense. And we're going to talk about why that is in just a little bit. But the institutions definitely pay attention to GEX levels. I promise you they do. I know I sure do. I know most of the real traders that I respect, in some way or another, they've incorporated this into their tool set. There are many ways to skin a cat, but it's a good way to skin a cat right here. So most retail traders don't even know about this, to be honest. It always surprises me that traders who are really good in terms of like their mechanics, they just, this is something that's escaped them up to this point. It's just something that they hadn't stumbled across. And what is it, that XKCD comic? It's not like, oh, you're a bad trader, you don't know this. It's just, I'm psyched because I get to share it with you guys today. So what is it? So gamma exposure is going to be the hedging pressure that option dealers must execute as the price moves. And we'll break that down. So essentially, when you buy a call option, you're buying that from somebody. That's a contract. We don't just call them contracts for fun. That's a contract between you and the dealer. Almost always it's a dealer who is selling the call because they're making the market. So dealer, market maker, same thing, right? Their job is to provide liquidity, which means if you want to take a trade, it's their job to be on the other side of that. That carries inherent risk, right? Because if I think something's going up and I buy a call from you and then it starts going up, you're on the hook to pay me out. So what can you do if you're the dealer and you're on the hook with a call? Because I'm a great trader and I bought the right call and it's going up. So what can you do to mitigate your risk? Well, you can essentially hedge the options exposure you have. So here's how it works. Like I said, you buy the call, the dealer shorts that call. The dealer is now short that call. They need to hedge that risk. How do you hedge? You buy the underlying stock. So see what's going on here? Because they're selling something and they need to be delta neutral or flat, essentially, market makers do not make their money when the market goes up or down. They make their money on the amount of transactions and on the spread between the bid and the ask. And they use other strategies, yada yada, but let's not get too in the weeds. The point here is that they mechanically need to buy a stock if enough people buy calls. So this creates a self-fulfilling prophecy. And in the most extreme cases, this is what a gamma squeeze looks like. If we're trading GME and it's back in the day and you see them just piling into the next strike up and then the next strike up, as we get close to this strike up, as soon as we get here, they pile into the next strike up and price gets yanked up level to level. And this is, like I said, it's mechanical. So the dealers really have no say in this outside of they just need to do it to cover their risk. So if we can identify these points, it gives us some really clear level trading. So where were we? To hedge, they buy the underlying stock. This creates the buying pressure. And as price moves up to that gamma strike, they must adjust. So that equates to either more buying or more selling. Yeah. Hey, our good friend VSync in here saying until they run out of strikes. Yeah. So if anybody used to trade back in the 2021 crazy squeeze era, or if you guys are just, squeeze traders in general now, I'm sure they're still out there. But it would always be funny. You'd be like, uh-oh, we're out of strikes. Where do we go? Are they going to write more tomorrow, or is this the top? Usually that's where they're able to kind of dig their feet in, they being the market makers, and kind of, carve out a position for themselves where they can, assume that price won't keep going up because they can't be yanked up by the next gamma strike up. So good point there, VSync. Good to see you in here, man. Hope you're doing well. So is Talk saying, as long as the stocks are optionable these days, is a short squeeze. Yeah, I mean, well, a lot of people think a short squeeze has to be like a SMX or something. I actually don't know if that's a gamma squeeze. I'm assuming somebody's getting squeezed when its stock goes up that much, but um, didn't check if SMX. Yeah, I don't know if it has options either. It could be. I don't know. There are other mechanics to squeeze market makers, but the gamma ones are fun. What was I talking about? I don't even remember. Oh yeah, everybody's saying that gamma squeezes, or not everybody. You often associate gamma squeeze with a GME type move, but I mean, Rivian was gamma squeezing this week. I was playing it. I was watching. It was trading at like 1550 to 16, and I saw this massive amount of weekly 1750 calls coming in, and lo and behold, I just bought the dip up to that 1750. It actually popped above it, so I was selling above it, buying below when it came back, and it created this phenomenon called positive gamma, a positive gamma environment where, well, let's not get ahead of ourselves. We'll get into it. But first off, just this is really important, so we're going to go over it really quick again. When I buy a call, a dealer is selling a call. The dealer's now short that call, and they need to hedge in case I'm right and my call goes up. To do that, they buy my stock and push my stock up. So I like this. This is why I like it. All right. So now we're going to get into the positive versus negative. So pretty straightforward in at the face of it, at least. If you're in positive gamma, calls dominate. We are above, we are essentially, the dealer position is short calls overall because the stock is in positive gamma. There are enough people who are buying calls that the dealer is net short because they are selling those calls to the buyers. When this happens, it creates an environment where dealers have to basically fade momentum, which means if the stock is going up just really hard, really fast, they have to sell into that. And if it's going down, they have to buy it. So it creates stabilization to the price action. So you get suppressed, range bound, low volatility trading. So when we are in a crazy bull market rally, especially like, I mean, heck, I could give you a bunch of years, but recently there've been a couple pretty substantial periods we were just incredibly low VIX, like 12 to 16 handle VIX, and we were just every single day. It was just like, oh, did we get a dip? Well, let's buy it because you know what happens? The dip gets bought, right? This is this positive gamma where when price starts to go up to the level, well, then dealers can sell price down off of that level, but overall we're still going to drift up. So it's like a it's this concept of, okay, here's the level. It's a big magnet if we're lower, right? We come up to it, but as we get really close, it actually starts repelling us a little bit. And that's that suppression price where as we approach the level fast, then dealers sell into it. And then as we come down off of that level, they buy it and provide a floor there. And usually what this looks like is you have your level, you come up to it, test it, you come down, you come up, test it again. You come down, but you don't come as low as you did before. So it creates an ascending triangle. And that's usually the way that a level will break in positive gamma. It'll create compression between those buyers, the dealers just naturally buying it up on every pullback from the level. And eventually it will pop through if there's an incentive for price to move above it. What would that incentive be? Well, usually it would be a larger gamma strike above. So if that makes sense, we're going to move on to negative gamma really quick. Just as an analogy, they're like shock absorbers, right? So they're if your car has no shocks, you feel every bump. If you got really good shock absorbers, then you essentially are mitigating the volatility. Same thing. So the takeaway here is when positive gamma is high, price stays in range until it has a reason to be yanked above the range. So buy the dip in positive gamma is basically the long and short of it. Negative gamma, a little bit different. Let's see. Sims in a Cafe asking, can you give us an example, recent real case? Yes. So in just a few slides, we're going to be talking about today's gamma exposure profile. And we're going to be talking about what I was looking at when I put that slide together yesterday, as well as, how it kind of played out. And we'll have more examples too, time allowing. And if not, then next week we're going to be doing a lot of examples because I want to really show you guys how I actually use this because I use this every single day. Good question, though. Good question. Where were we? Negative gamma. So this is when puts dominate. So when we were testing that neckline on SPY and QQQ, when it was looking like we might break down a few weeks ago before the Thanksgiving week rally, what was happening there is that we were basically trading into the zero gamma level. The zero gamma level, ever so conveniently aligned with that major, support resistance level that was on everybody's charts. There was, I believe, maybe a month ago. It was the great flash crash of the cooking oil flash crash when Trump said something silly about cooking oil and tariffs in China, and market dumped 2%, not because of what he said so much as that something was said and we were running hot. Regardless, it came down and created a very hard bottom level that the next day we gapped above, traded higher, and then the next big red candle came right back down to that. So we had this big level. There was a large gamma flip level. This means that as long as we were above that level, the dip got bought. If we had lost that level, then the gamma exposure charts were showing significant gamma much lower. So remember, negative gamma is when everything does the opposite of positive gamma. So if in positive gamma we're buying the dip, then that's kind of what we saw, right? We held the level and then the dip got bought and we just drifted back on up into the range. If we had lost it, then we would have been looking at a negative gamma situation. So let's talk about that. When you're in negative gamma, the dealer's positioning is short puts, short stock. So they are going to short stock to hedge. They're got my slide got off kilter here and I lost my train of thought there. Apologies. So the dealer behavior in this negative gamma is going to be the opposite of the positive. So in positive, it's suppressive. We buy dips and we sell, or they buy dips and they sell rips. In negative gamma, they have to trade almost like CTAs, so in trending ways. So they have to sell into weakness and buy into strength. So the implication here is that the momentum is going to accelerate regardless of the direction. And so that's why in bear markets, you get these face rip rallies, these gnarly like 2% rallies, and then it just dies off again, right? That is how price acts in negative gamma. So guys, negative gamma is when you just get disrespected by the market. When you have a level and it just blows through it and then whips back up, rips all the stops out, rips you out of the position, and then it does the thing that you're kind of expecting anyway. Negative gamma is bad vibes, okay? Why I say this is because this was such a game changer for me. Because those days when you're like, why is price being an asshole? Like, why is it so mean? Why is it acting like this? Why is it reaching for stops so vigorously? Why isn't it one of those days where it was just easy money by the dip? Well, once I looked under the hood, the difference was that we were in negative gamma on these days where I was getting chopped up. So what we can infer here is that on the positive side here, it's like the bowling alley has the rails up on the side, right? So, it's going to suppress volatility. It's going to keep you in the range. This is the complete opposite. This is saying, oh, we're trading into a level. Oh, we're going to smash that level and make you think that it is just being busted straight through, no support. Lo and behold, it's just over expanding on that move, over accelerating to the downside. The level is still valid. It's just they need to really reach down in there to find the buyers. And then the buyers are going to step in with force because it's oversold, overstretched. Even if high time frame, it's a dead cat bounce and we're going lower, you still get these really strong moves. So it really does affect how we trade, right? In terms of like where I take my profits. If we're in positive gamma, I sell a few ticks before the big level that I'm looking to eventually break above. I trim into it, comes down a little bit. If I'm feeling spicy, if I'm feeling cute, maybe I add a little, trim a little more, add a little, trim a little more, and I build myself a little position for if we do get the breakout. If not, well, the sell isn't going to be too painful, and I'll stop out on any ads, maybe break even or for a small gain. But in general, it's very reliable. When I trade in negative gamma, that's when I'm looking for my, like, you gotta give me a good look, like let me find a fair value gap under a level, that corresponds with another indicator or something so that I can get a really nice fill when we come down under the level. And by the time we reclaim it, assuming we do, I'm nice and green. This is essentially akin to dealers. they're kind of throwing gas on the fire here in both directions, and this negative gamma cleans books out very easily. It wicks back and forth and just pushes things all over the place. And it, like I said, it cleans that book up. So it cleans the orders out long and short. It allows price to kind of shake off those magnets and continue on in the direction that it intends to go. So critical understanding here is positive gamma equals price compression and negative gamma equals price expansion. So here's another key insight for you. Options dealers, they're the big boys on the block. They're the largest participants in the market. Their hedging activity is very key in how price negotiates ranges intraday. So what happens on a 0 DTE gamma exposure profile chart is not going to be the end all be all for where we end up in a month. But in terms of how we negotiate the daily candle, this is my Bible. I swear by this stuff. So GEX tells you where dealers must buy or sell. So for today, for example, let's see, I think it's the next slide. Yeah. So let's talk about how to read this first off, and then we're going to talk about how this actually played out today. So how do we read a GEX chart? Well, the key elements are a few things here. We have the 0 gamma line, and this is dividing the line between positive and negative gamma. So actually it's going to be this gamma flip right here. This yellow is where the price was trading when I took the screenshot. So this is going to be the gamma flip, the 682 level, and you can see pretty clearly red below, green above. So if we get down in here, price is going to start acting a lot wilder, whereas when we're up here, price is going to be pretty mellow. And so this is really important to know, right? Because if you're sitting on this gamma wall, and for you, you're like, hey, this is support for me. For whatever reason, I think that we should find buyers, and you start seeing that getting bought, that can be a really nice area to get involved, because we are basically, confirming, just like we did on the daily chart when we held that key neckline where it was negative gamma below. If we can hold that, then you're just basically, getting in for a nice move up. You also just have to be very cognizant that if we lose this level, I need to have hedges, because we could really expand downwards. So we have the 0 gamma line, the gamma flip point. The maximum strike is going to be very important, because this is going to act as a magnet. So this is usually this is the strike with the most open interest. So the most contracts that are open that haven't been closed, usually calls, and price is going to be magnetically attracted here if we're in positive gamma, that is. So if we see this big 685 level and we see a dip to 682 starting to stabilize and getting bought, we have a really nice setup for a nice clean trade to the 685, or up into near the 685 at the very least, maybe 684.50, something like that. We can start being aware that we might see weakness stepping in or slowing down. And that's because as we approach the 685 strike, dealers do not have to buy as much anymore, unless this strike, this 690, starts growing and growing and growing and outpacing this and becomes the new magnet to draw us up there. So in general, this is kind of how you can start framing trades with just this one tool. Let me check on the comments here. Talk's always got good insight. Let me read this. You guys can read it with me. A negative gamma event is usually environment driven and is brought on by a collective positioning of options participants. However, can be brought on by a stock specific event. Trying to understand which event comes first is the trick. Interesting. So essentially what he's saying, I believe, is that if negative gamma plays out, usually there's something that really shakes the market, some kind of data point, some kind of event, news-driven event that gets people scared, and it gets the momentum under that level, under that 0 gamma level. And that's when price accelerates, right? And if you have bad headlines and you have a bunch of people buying puts, and you would see these levels growing and growing and growing, that could be really spooky, because you could just get ripped right on down. And that's where it's, like a capitulation type event, where it's like the selling encourages more selling until there's no more sellers, or at least until the sellers are outpaced by passive buyers. So it is. Oh well, yeah. SoFi is actually a good example of some gamma exposure stuff going on. So I was in SoFi. I got in. I mean, I've been trading around it in the past couple weeks. Got in somewhere around 26 or 27 this time. And for me, the obvious target was 30, and I had no real interest of looking for a breakout, just because I saw how massive that gamma wall was at 30 on SoFi. So they had a big incentive to get it up to the 30. They also had a big incentive not to close it over there on the week, because what's going to pull it up above it? If they pull it out over there, those calls get paid out. It's much better for market makers to close right under a key gamma strike. So everybody's, involved in buying these calls that are going to end up expiring worthless, and they collect premium on them. So for me, it was a really straight shot trade. Get in off support. I don't even remember what it was. Chart looked good. And there's your target. And it actually popped 30. I sold just a little bit over 30. I think it went like 50 cents over. And then it just was just really just stuck in the mud and just kept getting sold off. And if I didn't know, I'd be like, hey, what the heck? 30 was resistance. We came back. We like formed a nice base. Now we're coming up into it again. Why can't we break through? What's the deal? Well, there was a large incentive for the market in terms of this gamma exposure to not go any higher. And now we're kind of tying it into what Talk's saying. Lo and behold, they diluted the heck out of, I think you might have even mentioned stock offerings or something. Yeah, can stock dilution bring on a negative gamma effect? Well, I think that for whatever reason, you could look at it two ways. You could be conspiratorial and say, hey, the reason why the gamma wall was there is because they were going to dilute, and everybody knew except for us. I think more likely is that SoFi's financial department was like, oh, there's a massive gamma wall here. This is a good time to dilute because we're not going higher right now anyway. I don't know. I'm spitballing. I'm not in the room for any of these meetings, but it's kind of interesting to conceptualize. And this is where I'm still learning for sure. So talk if you or anybody else has insight here. Very interested. User 72001, finally a proper GEX lesson. Oh, well, let's not get ahead of ourselves, but it's very useful. It's very useful. I'll never claim to be a pro on just about anything, but this is for me, it's a pretty intuitive concept. So easy to teach because it's easy to trade, for me at least. And I like those tools. Sims in a cafe saying it's almost like surfing, threading the water to feel when and where the wave is. Yeah, exactly. You're getting a feel. And that's a great example because, like water, it's dynamic. It's going to move on you. It's not going to be this static thing. So you got to keep on toeing the line. You got to keep on feeling it out. And you got to keep on, referring to your intraday gamma charts if you are going to be using them in these kind of ways. Usually what you'll see is price trading up to this big level, coming down a little bit, bopping in. And if we're going higher, you'll see this next big spike grow. And very often it's like, okay, we failed to break over this time. Where are we going to go? Well, there's this nice little pocket. You see that little pocket right there? You got the bigger candle here, then this little one, and a bigger one. Often, price is going to dip right into there, and you can get a nice little entry again and just keep testing. And if this keeps growing, you can expect this wall to get whittled down and this one to grow. When it's this big like this, usually this is going to be where we kind of pin around. So maybe we do go above, but there's a good incentive to close it below, and there's not much incentive to rip it higher. That's how I'd kind of look at that. Technician asking, where can you find a GEX chart? Great question. So there are a number of services, most of them paid. Unusual Whales is probably the most popular. That's what I usually use. Let's see, there's also Trady Ticks, I think, is one. There's a bunch, but you can find free GEX charts on, I believe it is barchart.com. You can't, they're not going to update constantly, but at the very least, I know for a fact you can get the ones for basically, is a snapshot after the market closes about what the GEX profile is for a given date. So that's a great resource. I'm not sure if they are still open to the public, but previously gexstream.com, I believe that was a completely free one as well. Not 100% sure. I use Unusual Whales, and I pay for it, but it's worth it for me. Let's see. Let's move on along here. Oh, Actually, yeah, we're just about done with the lesson. I know we didn't run too long, so we can get into some charts. We can check out some stuff, and then next week I want to get really nitty gritty. I want to talk about some really specific strategies with lots of diagrams. We're going to be talking about how we can kind of just advance these basic concepts that we kind of started to lock in on here today. So there's a lot of ways you can manage your risk regarding GEX trading, specifically around those negative gamma levels, those gamma flip levels. Because it's really good information to know. Hey, this level is important because if we lose it, we're going down fast, right? So then you can secure your puts, your hedges, and lo and behold, worst case, God forbid, if we do lose the gamma flip and start puking, you're protected and you knew it was coming. Because I think the thing that gets people most with these gamma flips is when they flip, it's like a if you know type of thing. If you know that we're in negative gamma, then you are selling any pop, assuming that we're not reclaiming the level. And if not, you might be still stuck in that positive gamma by the dip mode, and you're just buying dips all the way down. So really good for risk management. Like I said, I'll talk about my strategies that I use. There's kind of a few plays that I run, so to speak, for GEX levels, and I combine them with my other systems. So that's where I think we're going to need a little more time to kind of really dive into it. But yeah, that's what's up on tap for not next week, because every other week we do our trade recaps, all my trades of the week, what I'm looking forward to next week. So next week we'll have one of those. The week after that we'll be getting into the advanced gamma stuff. So I hope you like this, guys. If you have any questions, this is going to be where we're going to start taking questions, start looking into some charts, and it's Friday. We're hanging out. We can talk about whatever you guys want, honestly. But thank you for coming to my TED Talk here. uh, yeah, Unusual Whales is real good. I'm a big fan. I've heard people rave over Tradie Ticks. I'm not familiar with them, but good stuff. One other little free resource for you: Geeks of Finance on YouTube. Their channel is great. They have a paid service. I'm not shilling for them. I don't know if it's good or not. What I do know is their analysis is very good and free. So definitely check them out. Shout out Geeks of Finance. Um, yeah. So that's mostly what I have to talk about. Yeah, next week we got lots of data. We got that purple tie coming in. You know what to do. You know what to do. As long as he says, what is it? Good morning. What's the one we want? Is it good morning or what is it? I remember. Who remembers that clip of somebody bet like an insane amount on whether he would say like good morning or whatever else he would say. All right, I'm losing it here, guys. I'm in meme brain. So let's get into some charts and questions. Give me a sec while I switch out of this. One moment. Sorry, guys. Thought I had my broker open and ready to go here. Got to log in. Almost there. Got to navigate some menus. I got too many of these prop accounts. Got to make sure I'm in the right one. Okay. So, what have you guys been trading this week, huh? It's been making you money as we load in here. There we go. Sold MDB, added positions in V, FISV, and TRGP. Let's take a look at some of those charts. I was a big MDB bull. I did not play, but I liked it. They're running a little hot. Software as a service seems excellent. Interesting. We got the gap up. I'm assuming on earnings. I'm interested to talk. You think software is just a little long in the tooth here? I'm thinking this looks like a post earnings gap breakout to me. I think I still like this. One of these bad boys, and it's cooking it. Just about cooking it. Solid structure. Kind of like it still. I don't know. I will watch how this one develops. Software as a service in general. I was thinking of snow looking pretty good, I think. Oh, snow broke down. Interesting. Back to support. Let's look at the ETF real quick. Looks pretty good to me. I wish we had access to my ratio charts on here because I like keeping track of the IGV over SMH. And that is essentially telling me how software is doing versus hardware. And it can help me kind of position like, all right, do I want to be in chips? Do I want to be in software? That kind of thing. Yeah, great earnings. Caught the 80. Hey, if you caught it, take the money. Take the money. I like it. You like Adobe? I don't know, man. I don't know. Maybe sentiment's bad enough. That could be a bottom. Could be a bottom. It was looking rough. I looked at it last week around here, and I was not liking this into this. More like this into this into this, just beating on this level. We flushed the level and found buyers. I don't hate it. Oh, that's a gut check, though. All right, we'll keep thinking about this one. I think you might be onto something, though. No, you do not own it. Yeah, okay. Yeah, I'm not touching it yet, but I am curious to see how these play out. Haven't looked at Salesforce in a while. That's looking a little bit better to me. All right, what is this? Is this a reclaim of the 50 fib right here? I bet. Let's see if I still got it. See if the old guy still got it. Boom. I'm so Fibonacci brain rotted. You show me anything and I will divide it into segments in my mind in Fibonacci levels. Okay, what else do we got? Netflix is interesting. So they are acquiring Warner Brothers, right? And market is not happy. You also have the downward pressure after the split. It just became really heavy. I think Netflix has some work to do. But, there's the imbalance on the weekly, tagged it, showed a little bit of respect, probably chops around in here a little bit. What do you think? Maybe a head and shoulders? Or maybe just a rebase in this zone is probably more likely. Not my favorite mega cap at all, though. Meta doing great. Google still doing great. I love those guys. Amazon playing games. I think Google's going to keep going, honestly. I think this one's still cooking. Yeah, Netflix still needs approval. Yeah, okay. You know me. I'm not a very catalyst-driven trader. This is crazy. The WBD. Just surfing those moving averages. Moving beautifully. High time frame. What do we got? Yeah, it's coming back in. This thing looks like it's going to Palantir. For anybody not familiar with what a Palantir pattern is, it's when you got this big cup on a monthly and you tag the new high, and instead of building out a handle, you just scream up into the extensions. So we will see. This is definitely a contender for this. I'll give you one more contender for this type of move too. This one I am positioned in a little bit aggressively, but love the fundamentals. I love the narrative on this one. They're drones. They're getting contracts. The CEO is putting in some work. Very, very good management. Turning this from a meme that nobody believed in, and now institutions are piling in up in this range. And this is the kind of chart I love to see. I love to see institutions getting involved at the top of a range, because that shows that this is just a base and we're going much higher. I do believe also in the drone space. Oh, my boy Josh, you caught the SMX. Oh, we got to talk about the SMX. That's so crazy. I was short SMX earlier in the week, and then I took it off my focus list. And talk about dodging bullets. This is insane. So we were streaming when it was basing here for Power Hour, and we said, what did we say? I wonder if our lines are still on there. Oh, it's a different account, so probably not. But we said, I'll give you another reason to trade fibs, guys. These things work so well for the small caps. So take the high, take the low of the flag. We said once it broke here, so the incentive, let's zoom in. The price incentive in this flag as it was basing and finding buyers holding the 62 fib was to sweep the high. Me and Joe were watching it here going, hey, it looks pretty good. We both just stared at it. As in 2 minutes, it screamed up $20. Tagged this. And then what happened? Back test, super clean, and kept going. So then we were watching it here going, where in the world could it go? Well, the next fib extension, I don't actually use the 138. I use this 168. I use this a ton. I said, hey, this is where I would be trimming. This is where I would be looking to get out at. And that is where we saw some consolidation and a sell-off. It did go higher, but hey, it went from 162 all the way back to fill this imbalance here at 124. So definitely a response here. And now we're just climbing on up. Wow, look at that. After hours hits the 261. We're into the 423. Do we have any more on this? Doesn't look like it. Insane. So fibs are great for these ones that just keep running, because who the heck has a target for this thing? I guess we could look at the higher time frames. I guess this one was, what in the world? That's just a crazy chart. Yeah, at some point, there's only so much TA can do. But for these crazy breakouts, I love these fib extensions. Definitely something to think about. Josh, I got chopped out today. I didn't do great. I have a lot of conviction that we are heading to 700 on SPY pretty quick, definitely by the end of the year. I positioned in some pullbacks on momentum names. Your play was over 325 for the long. Man, see, you're a cowboy, brother. I need to get my confidence up, because clearly the right move, but that chart scared me off when I saw it going from 30 to 60. I said, hey, the juice has been squoze, but clearly I was very wrong. So I'm not a small cap guy. Josh over here knows his shit about small caps. Him and Kevin, great small cap traders. Mitch knows what's up. Michael and me are the old school guys who are like, that looks scary, but he still knows how to trade him too. TDG. So anyways, yeah, I got a little chopped out. I took some swing positions in UUUU. The dip kept on dipping on me. I still have confidence. ONDS didn't get the breakout I was looking for today. Still got confidence, still holding. What else did I do today? Rivian. We'll come back to this TDG because that looks really nice too. Rivian, this one. See, I got my heart set on these long-term breakouts, man. I'm thinking, I got my head in the what's coming out off the bottom in this time of year. We have the tax loss harvesting pressure starting to roll off. You have people starting to look for baskets of names that maybe had good news, but were just punished because there was positioning heavily against them all year long. A lot of these are like long short trades by big institutions, where they're just beating something into the ground, selling the heck out of it to buy something that's momentum on the way up. So the big one for 2024 was everybody and their mom was selling Chinese names to buy QQQ and mega caps. So for me, when we started to see all of this bullish news for BABA, for example, that was my big play, and it wasn't getting any lift. Then, once we got this positioning starting to roll off into the end of the year, and especially into the beginning of the year, then it really started to get the moves that it should have previously, or that it was warranted for the news. So the fundamentals have a chance to catch up once positioning rolls off. So I'm digging through the dumpsters. We're dumpster diving. We are bottom feeding, and there's some good names out here. One of those doesn't look like a bottom feed when it's up here, but if you zoom out enough, guys, we are not exactly overextended. So here, I really, really like this curled base like this. I think this one's going to be a really hated rally. I think it's going to be a really hated rally, but I think we're going to get it. What I'm seeing is a few things here. Oh, let me let my cat in. You guys want the cat tax? Come on, Cleo. All right, she's just going to mean mug me from the windowsill. That's fine too. So we have some really key levels here. We hit new 52-week highs today. We did not close the week over 18. That's what I was hoping. I was hoping a close over 18, or ideally a close over the 1886. We did not get that. We got close. We did not close over the last week's high either. So we might be in a little bit of a holding pattern on the weekly. Let's look at the weekly there. We might need to chop out here a little bit, but man, guys, I'm either selling these shares for 5-baggers or they're going to be my children's only inheritance. That's what I will say about Rivian. When you have a chart this good, this is a fat pitch for me. This thing's screaming at me just like Hood was a few years ago at 14, 12 to 14 range. Yeah, right up in here. So there was the previous high. We scooped above it, washed everybody out. I really hope Rivian doesn't need to do that again. But then broke again, washed people out again. This was a move from 14 to 11 to 10. So these little dips to actually add for a long-term position, they can feel really bad when you're digging out of a long-term base like this. So that's where you have to have confidence in the fundamentals. You have to have an understanding of why this narrative could take fire and take hold right now. But if you catch it, then you get one of these crazy moves potentially. Palantir, another great example. I missed this one. I was I was the biggest bull who didn't buy. Let's put it like that, because I felt like I missed it when it went from $8 to 17 and I just stopped watching it, But once these get moving, boy, can they get moving. So this is my bread and butter, these stage 1 breakouts. So I would love to see this one hold. Talk. I would love to have you on. Let's definitely talk. Yeah, no, you are a wealth of knowledge. Oh, maybe you're talking to Josh here. He's got a show too. Yeah, you're talking to Josh. Sorry. Yeah, go on his show. I don't know what I'm doing. Let's see. All right. There we go. Say hi, Cleo. Oh, squiggly today. This is Cleo. She keeps me sane when ONDS is dropping 5% on great news like yesterday. Anyways. What else is shaking? Yeah, I like Rivian a lot, guys. Use another name I was considering for a similar one here. Where did we close? 50 or 45, 77. This one, so I got in yesterday, and I might be a paper hands, but I'm already out. I think it might do the whole thing. It might do the real move, but here's what I was seeing. I saw it fail to break this, and as soon as it failed and started to post a red candle, I just said, all right, I'm going to take like a 30% gain on a monthly or something like that. I really wanted to see a strong surge, at least to go through this level. When we didn't get that, I was just had in the back of my mind, there were some bears bopping around Twitter talking about this big negative gamma profile or negative gamma level all the way down at 38. And I was just thinking, man, if this is a rising wedge like this kind of thing, this one loves to chop you out. So for me, small win, good enough. We're going to keep this on the watch list though, because like I said, going into next year, I think these are the names to watch. These huge bases. And you can just see it's right where the price closed, but this is big resistance. If we can cook it, this thing can double. So liking this one. ONDS. Yeah, you guys like it too? I've been staring at it for so long that I'm starting to second guess myself. But when I see this, let me show you what chart it reminds me of. I mean, pick a quantum name, but oh, Ion Q is the one I think it looked very similar to. Pretty similar. So here comes up and starts chopping. This one had this death stick, so it kind of makes sense that it needed to carve out lower. Hoping we don't get one of those on ONDS because it is absolutely overbought on the monthly. Thing is, when you have a fundamental narrative shift, like I do believe we are getting with ONDS, it can stay overbought on the monthly all the way to a triple. We don't sell something because it's just because it's overbought, because all that means is a lot of people are buying it. You know, so when I see the ONDS chart, I'm basically seeing this big cup and then consolidation at the IPO high. And when you get these moves, they can be really, really explosive. The whole drone space has a lot of these charts. Archer is one of my nemesis. I've been trying to catch this breakout like 3 times and gotten stopped out. One of these days it'll go. Probably not with me. I think I'm tapped out on this one, and I'm into ONDS, and I like RCAT too. This is another one that I'm going to start accumulating in the big boy port, the Roth, that I don't look at, so I won't get stressed if it goes down to 5. But I think long term, nothing but good for drones long term. Any speculative sector, it's gonna rip you if you stay too long. Overstay your welcome. But I think these have legs. Rigetti had a day. Yeah, we were talking about Rigetti and the whole basket. Thematically, I'm just a bummer. I don't believe in quantum computing. At least I don't believe that they should be valued anywhere up here. I also am very much not a fundamentals trader, so I will not fight price. But it makes me a little less hesitant to buy into this as opposed to some of the other momentum baskets, which I love, like uranium. Where is it? There it is. Uranium. So these momentum names I'm getting more interested in. I started a position in uranium, or in UUUUU this week at 15-ish, somewhere in there. I added too early at 16 today. I thought we were doing a back test of this candle, this area, and we're going to catch. We did not. What we did do, we held some key levels. There is a rising, I think, 20-day moving average right about here. We did hold this previous little pivot, not a major pivot. Could call that a pivot too, maybe. Tagged it and bounced. We did not engulf the candle. It's not the most beautiful candle ever, but intraday, the price action was not enough to scare me out. I saw a double bottom here. Wish we could have closed above the neckline, but this is acceptable for me. I think these names go higher. I don't know if it's just me. Yeah, spec. Let's talk nuclear, exactly. Talk nukes to me. So I've been telling people, yes, exactly. So if you want quality CEGs, the blue chip, real tight flag at all-time highs, this one will go higher. Kind of spooky on the monthly, little rising wedgie, but you know what else was a rising wedge? SPY like $200 ago, so not too worried about that. CEG, very high quality. I would say CCJ, the other high quality one here for me. Not familiar with Southern. What's the ticker there? I probably know the ticker. If you didn't know, I'm a tourist in this space, just like every other one. But you know what? They all got candles, so if it's got candles, I can trade it. CJ, this one's looking real nice too. I like these bloody nose candles after big green. I don't think it's something to be worried about. I think we're just back testing a pivot. I think we're just consolidating in a healthy way. I hope. I see these as a big place to hit. There's these gaps right here on a lot of these charts. And if you don't want to pick a favorite, buy the ETF. URA. So it holds a bunch of different stuff. If you want to be really degen, check out the small scale nuclear reactors. This one's trying. I got a few shares of SMR from under 20, but sized so that if it goes to under 10, I won't cry about it. Let's put it like that. So it's not going to make or break my year, but you got to play a little bit. You got to play a little bit. Sims in a cafe saying this gamma info is really important for me. In IDX, we don't trade short, only long, so it's a good thing. Absolutely, I'm really glad you got something out of it. It's something that it takes a little bit. If you've already got it, you're good to go. But like it takes a little bit to kind of internalize and kind of work it into your trading system. But for me, it was like a light bulb moment. I would say gamma exposure and the wave trend oscillator that I've been incorporating are the two biggest kind of plateau breaks for me this year in trading. I'm feeling like I'm trading not this week, but this month, almost my best. So hopefully that continues. And it's really helpful for me. All right. Oh yeah. Talking natty. Yeah. TGRP. That's the, okay. I remember that one. That one is something to do with, I want to say pipelines and like somewhere in, okay. Never mind. I don't know. I remember featuring them in my energy report like 2 months ago because the chart looked good then. And yeah, natural gas. I can't look at futures. So what can I do? UNG is probably decent analog. Yeah, boom, there you go. Natty gas, baby, the Widowmaker. Yeah, I'm very bullish on natural gas. I think it's a great alternative to oil. I don't like oil. I think solar is cool. I don't think that it has the immediacy um, of use cases that natural gas does. It's cheap. We just make it by drilling. We're drill baby drilling. Um, OPEC has much less of a crushing hand ability to, just crush this one. A whole lot of other things can crush it, but in general, got a cold winter coming. We got a whole lot of data centers looking for alternative power. Coal sucks. Coal's dumb. I don't know. I think natural gas is in a great place right now, and that's something you don't get to say very often. Natural gas has been having a tough couple years. Let's say that. So there's some ways to play this. You have companies that produce a lot of it, so their equity price is tied to it, and I believe they are undervalued. AR, this is the one I'm in because I don't want to say shitcos. I like companies with questionable management that I think are undervalued because I'm not here to buy the best companies. I'm here to buy the most undervalued companies. Um, Yeah, OPEC, give them till midterms to keep price. Exactly. I agree that there's incentive for price suppression, at least until midterms. Um, Also, I just don't like the charts of most oil charts compared to anything with natural gas exposure. I'll throw you one that I don't think the chart looks that amazing, but apparently the fundamentals are phenomenal. This is a long-term play, GLNG. They do shipping of liquid natural gas. This is an interesting one. They trade more off of LNG spreads, I believe, than natural gas as a whole. Just wanted to keep on your radar. So the big boys, RRC, this one cooking an absolute massive base here on the weekly. And my favorite, I do have a few shares, not enough. I didn't really have time to build a position, but EQT. This one looks phenomenal to me. This one looks absolutely beautiful. So what I see here, if I can move my, there we go. What I'm seeing here, large cup, large base, large range, however you want to say it. Then we consolidate here. I look at this as a wick off type beat. Maybe not perfect, but essentially it is a reaccumulation pattern. Sorry, my computer's lagging here, so that's why my cursor's lagging. But what we see in this accumulation range, we see one low, we see two lows, we see a downtrend line get broken with a gap up to boot, and then we see consolidation towards the high of the range. This would be an SOS, a sign of strength in a Wyckoff diagram. Then chop and bop people out in an expanding megaphone breaks higher. And what do we actually form? We form a cup pattern. And this is really explosive. Whenever you get a cup with a handle that actually forms above the lip of the cup, I find these to be very, very explosive. My favorite example of this is ASTS. So I think we're cut off on price here. I think it came up, I think it started around 20. I could be wrong. But what I recall is this being a large cup and then this handle cupping out essentially straight up above the whole base. So just mad bullish. Then you get the same double bottom here and then just boom, crazy expansion. And you get some really clean measured moves here. Let me fight my CPU real quick. Apparently it does not like fibs. Yeah, this tap of the 618 was so clean. Then it comes back, test the high, and get back involved there. And then you can redraw this from this low to this high. And lo and behold, where did the sellers step in? Where are those top wicks? Over that 618. Real clean, real clean. This might have been a 2 times measured move. Let's see, 103. Price from 18 to 60. Call it $40 move there. 60 to 100, $40 move there. That's it's close enough for government work. It's a measured move and a half. Well, a full measured move. All right. Let me get back in the comments here. Talk. Yeah, MP. I grabbed some shares of MP today too. Thanks for reminding me. UUUU and MP are the ways that I am playing. Oh, I also have a one contract of UAMY following some flow. I believe I'm 5-10% red on this one. I kind of like the shape and structure of this one too. CRML is another one we can watch as it consolidates into the $10 handle. I think rare earth metals, rare earth elements, the REs, I think that they're going to have a resurgence here. A resurgence. Oops, I don't want the warrants. There we go. So watching this 10 level very close, I'd love to post a couple inside days here, coiling under the 10, give us some nice entries in this expansion here on the weekly, and then we can push up for this weekly imbalance at the 14 area and eventually carve our way up somewhere. This chart's weird. I'm not really sure. Whenever you get a parabolic move like that, it's hard to believe it's going higher, but I kind of think it will. Definitely too early to tell. All we can really know is that it's probably got an incentive to come up somewhere around here. So I like CRML. I scalped USAR yesterday. I left a lot of money on the table because I sold into 16 and it went to 1750 and I had a 17 strike call. So whoops. Yeah. Talk's dropping some gems here in terms of macro. Let me process some of this. Sims in a cafe likes geothermal. I'm here for it. I'm all for. I'm a big energy guy. High energy guy. You know, I want us to produce more energy. Drilling is great, whatever. I want to see us allocate towards nuclear much more. I don't know if I'm crazy, but I got a sneaky feeling that sometime before midterms, we are going to hear an announcement about a strategic uranium reserve, which would be pretty good for our stocks. I don't know if I'm completely speculating there. I know I'm completely speculating. I don't know if I'm completely full of it, but so Japan and Germany will be forced to find new creative ways to provide reasonably priced energy. Yeah, absolutely. Fully expect Japan to buy less U.S. treasuries to support their own businesses. Okay. I like that. I think that fits with my. Got too many theses. I think that fits with them. I think I like that. Data centers need water, HVAC, power distribution. Yeah, if anybody was in any doubt, look at this chart. FIX. This one makes me feel silly for not getting involved a long time ago when everybody's talking about it down here. Crazy chart. Crazy chart. So, another one for air conditioning, or what we call HVAC, I guess. I think VRT. Wow. Yep. VRT. These guys are power players in this space as well. I would assume this one goes a lot higher. This is one of those that you just kind of buy and hold, I think. TLN. Huh. This one's actually looking kind of weak. I actually don't like the look of this, but thought they were high quality. Maybe they just ran too much and need to come back a little. Definitely an interesting sector to keep an eye on. AWK, what is that? Is that something to do with water? American Waterworks. Yeah, was this a Michael Burry play from like a half a decade ago? Why do I know this ticker? So what's the play here? They literally just own water, and we're gonna need to water cool everything. I mean, heck, I guess that's a base. 5-year base, trying to post higher lows. Kind of a weird chart, huh? This structure kind of looks bear flaggy to me, but those are some strong buys. I don't have volume on here, so I'll have to check in my other charts, but it's interesting. It's interesting. Talk's got all the megas, all the insane ones. I remember Eaton was showing up on when I just started trading like VCP, volatility contraction patterns. When I just started trading like can slim style setups, ETN was always coming up on my focus lists. Way in this area was when I was doing this. Got a little bit of egg on my face. I did not get involved. Quite a move. These are such high quality companies. ETN, what's the other one? JCI, I think. Yeah, Johnson Controls. Crazy strong. I'm curious about analog devices. Look at that. Look at that. So I believe all of these guys make boring electronic components, boring chips for ADI. You know, like a lot of stuff that doesn't have the what would you call it? The curb appeal, I guess, is some of the first order thinking AI plays or Internet of Thing plays, whatever you kind of put this basket in. Stuff like what? What are we seeing catch up now? Purple Cable Company, go Burr. Yeah, so you're seeing a lot of, and this is basically my thesis for playing the middle innings of the AI cycle. We are targeting infrastructure, supply chain. We are targeting second order beneficiaries, not just the guys like Nvidia, Broadcom, although I do still like Broadcom. So how we played this theme so far, about in September, we were positioning in not TEM, Teradyne. That's what I'm thinking of. Yeah, there it is. So we were getting involved in the 90s and adding in here. This was the big one, Amcor, the other big one. These guys are going through kind of a phase shift as a company, a big pivot where, the market likes it. So we got in this 122-ish, somewhere in this consolidation. We still hold. I'm waiting for my trim to fill up here. My Teradyne trim filled when it bagged. So 90, 180, right about there. Really like these trades. I think they still have room. Don't necessarily think you should get involved right here, but yeah, I like these a lot still. What else we got going on? Water purifiers, yeah. Here's this year end. FXI up 32% and SPY up 16? And everybody is so bearish on China still. Blows my mind. Blows my mind. I am a mega China bull. Looks like it's about time to get involved again. Honestly, FXI looking tight. My baby PDD, I still have shares of that. They got beat up. I'm red on these now. I was buying in here. Still holding, not worried. Probably about time to add. Want to see if this bottom holds. I think it will. High time frame. These names, they got room, baby. They got room. Big pennant, basically. I like PDD. Baba, probably the best. Still, this is the main way I played. KWeb is great because you get exposure to Tencent, which is an amazing company that is not available except over the counter. So you can get a lot of exposure with KWeb. I like them for that reason. Yeah, I'm a big China bull. Hey, Howard, good to see you, brother. This gentleman does some really nice edits. He made me look professional. If he can do that, he can do anything. If you need some editing done, check out Howard Charts there. What else? What else we got cooking? What else we got cooking, boys? Give me some more charts. We've been going about an hour and 15. Let's do another 15 minutes here. That sound good? Let's do another 15. I'll go through a few more names that I like. Throw me some more stuff, though. Throw me some more stuff. I'm going blank. I gotta check. Gotta check my watch list. I don't even know what I like right now. We talked about Rivian. Oh, I got a fun one for you guys. Got a fun one. How about Wendy's? We're getting buyout rumors that I think are complete nonsense, complete hogwash. I got to find new ways to express discontent without swearing on stream. I like hogwash. We're going to go with hogwash. I think the rumors are hogwash, but I do think they're appearing because we're finding buyers at the bottom of a major range. I think this is in my basket. I know it's in my basket of beat to heck names that I think are undervalued and could start to bottom here and push up pretty aggressively, pretty fast. So Wendy's had big flow on 9 strike calls for May, and they were cheap. I bought one of them up like 20%. I don't plan on looking at it for a while, though, because I think we're going to go up and sweep this. And I would like to sell when I'm deeply in the money in maybe March or something. So Wendy's, I like it. We're starting to look for other of these beat down names that just simply will not get off the mat, and we can't figure out why. PayPal is on that list because, heck, they have been posting. I mean, not amazing earnings, but like they've been trading in the same range and getting cheaper in terms of valuation, essentially. Their earnings have not been bad enough to warrant this kind of price action. I think it's primarily positioning driven. I think everybody loves shorting this thing because, hey, it works. So, you know. you know. So I think that this is going to be in the basket for names that I at very least am considering to buy into next year. Let's see. Glass half full. Good to see you, brother. MU. Let's look at MU. What a powerhouse. One of the last remaining Titans. I wanted to short this when it looked like we might flush. Glad I didn't. Glad I didn't. Wish I bought it. Yeah, I wish I bought it there. It's a super cycle. What can you say? Memory is doing phenomenally. It should keep doing phenomenally. I don't see any reason to do anything other than go out and buy some DDR5 before it costs you more than your house. If you own it, hold it. If you don't, buy it, maybe. Not financial advice. Not financial advice, but it doesn't look bad. I think people saying it's too hot, it's run too much, were the same people saying Nvidia ran too much about 100% ago. So I still like MU. I would like it a little more if we kind of got a more mature consolidation forming here. I don't like the angle of this pennant. I don't trade these pennants at this high angle. It hasn't developed enough. It could very easily, when it's this sharp, you see we got 23 down and 41 is the angle up. That's a very sharp angled one. And usually when something's angled sharp like this, it has more of an incentive to break down. I don't think it's going to die. I think it would probably come down, form a higher low, rebase, give us a nice W pattern here, and then we could get involved somewhere once a higher low is formed down here. If you're still in it, probably keep holding. I wouldn't sell it. It's such a great company. SNDK SanDisk is another absolute monster. This one looks better to me. This one has more of a digestion period here. It's a little bit of a tighter range where it consolidated nicely, popped, back test, back test. Now it's got this nice new base forming, this nice downtrend line break here. We like that. I like that. Got a little W here. The boop, 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 boop. There's your target, 250. First trim target. Second target here. Third target, a 1.6 extension of this range. Which would put you at 350. There's a lot of room on these if they want to keep going. I think the fundamentals are there. It's just about whether they can form a constructive base and whether the theme is still in investors' minds as a hot one when that does happen there. Talk, you asking my thoughts on 2026? Here are my thoughts on 2026. Grain of salt. I am human. My financial takes are influenced by my political takes. Doesn't mean that I necessarily want to talk politics, but I do think it is a big part of this conversation. So at this point, pretty clear what Trump's agenda is. We are running it hot. We are getting that bag. We are securing the bag while the bag is there to secure. Things are not as good for most people as it seems when you look at consumer spending. We have gotten to a point where 10% of the top 10% of consumer spending of consumers accounts for the top 50% of consumer spending. We are seeing brutal compression on the bottom quartile in terms of rapidly rising healthcare costs, rapidly rising housing costs, childcare costs. It is hard to be poor right now. Don't let anybody tell you differently. If you're struggling, it is not a failure on your part. Maybe it is, I don't know. But overall, it's tough out there. What does this mean for the market? I think that as long as Trump is in office and he is not getting impeached, I don't think he's going to. I don't know. Who knows? Crazy world we live in. But as long as he's in charge, I think we're going to run it hot. I think that you want to have the majority of your net worth in the market because I think that is the only way you can keep up with all of these rising costs that I described. It is your hedge against a world which is increasingly unfavorable for people without a comfortable income. What I think in terms of the market more specifically, there is going to very likely, in my mind, there's big pendulum action whenever it comes to anything, whether it's a stock, whether it is, energy traveling in a sine wave, especially politics, the pendulum will swing back. We will not be this right wing forever. When we have left wing politics become appealing again, that will lead to a shift of capital out of the private sector to some degree back into the public sector. We see this historically. After every strong push right, usually you get a decent push left. Usually that leads to increased social services. Usually that leads to progressive taxation, fingers crossed, who knows, or some type of mitigation of this pain for the bottom quartile. I would expect the stock market to not appreciate a president who isn't trying to run it as hot as humanly possible. That being said, we have Hassett saying, hey, if I get the shoulder tap, I'm in there, baby. I'm the Fed chair. I'll do it. I'll say the things. I'll run it hot. Ideological capture of the Fed can't be bearish if you are in the stock market. I don't see how, So that's around the corner in 2026. We have rate cuts. We have the IWM. Let's look at the IWM. In terms of market sentiment into 2026, this is a big component of the look for me. Check the monthly. Out of this. It's not even a chart. That's just a line. Give me a break. There's a monthly. Charts like this, especially one indicating such risk-on sentiment like small craps. This is just an index full of BS. It's just an index. It's like, this is the index of unprofitable, whatever you'll want to call it. This is not what happens in a bear market. You know what else doesn't happen in a bear market? Oh, what is it? Talk, help me out. What's the transportation index? Is it DT? Transport. All right, guys, my brain's breaking. T-Port. I didn't even know there was a 3x leverage one. Man. Okay, well, this is definitely the right chart. It's just a leveraged version. So, like 9 days of well, let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We're going to call that a green candle. 10 days of green in a row, breaking a big base. I will take things that are not bearish for 500, Alex. When the transportation index moves this aggressively up, don't fade that. Transportation used to be the .com, like internet stocks, like back in the day, instead of buying some degen, growth stock like back then Amazon, Apple or whatever, those ones went crazy. Back then, if you wanted exposure to growth, you would buy railroads, you would buy transport. It moves things around. It's literally growth. If transport's down, the economy's in trouble. If transport's up, it's hard to be too bearish for me. This could change fast, but this is kind of where I'm at. I see things getting better. I see things getting better, both in terms of if you don't like the direction this country's going. Also, short term, just for your port, I think we have a good amount of time here to make a lot of money. And when we stop having that window, I think that will be a signal of things probably being better overall outside of the economic, or I should say, outside of your Roth's performance. So, we can hedge against things being kind of rough out there for a lot of people by having a lot of money in the stock market now. We can hedge against maybe the returns not being as explosive in a democratic regime by, hey, at least school children are being fed and, stuff like that. At least your grandma isn't going to die. Sorry to get political, guys. I know, divisive stuff. I'm here to make money. First off, that's really what it comes down to. And that's how I have been doing that this year. I've been betting on I've been betting on the taco, and the taco has been paying very well. Each time he says something silly, I say, that can't happen. That's not real life. And I buy the dip and it works amazingly. So until he stops running it hot and saying silly stuff, I'm going to keep buying the dip every time he does. That is, that's where I'm at. That's where I'm at. Yeah, I owe, let me catch up here on some comments. Dropping hot takes. I should probably see what the feedback is here. Healthcare just getting started as far as benefits managers, UNH, Cigna, Humana, absolutely. How you feeling on Oscar? Oscar is it's my darling. I love it. I think it's going up. Shout out Josh Kushner, the real Kushner entrepreneur in the family. That guy is a businessman. He knows what he's doing. I don't know about Jared, but Josh is the man. Oscar here, just what a massive base. On the monthly, this thing looks so darn good to me. But so darn good in a way that I could buy it and be wrong for another 4 months, and then it could still do a 100% move. And I just don't know if I have the patience for this, because this is tough. This is tough if you're not a buyer at 13 and a seller at 20 every single time, But if we do see the healthcare trend continue, Oscar occupies a nice corner of that. They are very exposed to the benefits managers side of things. They are a small cap. They move fast. If IWM goes up and healthcare is going up, these guys probably are going to move up a lot. So I'm keeping this in mind for safer plays. Again, tourist in the space. I think, what was the one I liked? There's Molina, there's Elevance. I know one of the charts was a standout to me. I think it might have been CNC. Centene. They're healthcare, right? Yeah, I'm pretty sure CNC is the one that I liked the most here. What else? UNH had weird flow today that I cannot explain. It was like, I'm sure my brain's just tired. It came in right at the end of the day and I was trying to parse it. It was 240 and 250 deep in the money debit spreads. My brain doesn't work, because that must be like synthetic position or something weird, because I don't get why you would do that otherwise. Okay, all right. Catching up on comments here again. Nvidia would be an investment short. Interesting. Talk. Let me try this pair trade on for size. Actually, let me reform. I'm gonna get back to you on that one next week. I haven't fully thought it out yet, but I think there's something cooking there. Yeah, hence Dollar Tree and Dollar General stocks are up. Absolutely. Walmart, Costco killing it. Your mom and pop shop, probably not so much. Yeah, Talk remembers. Talk's an OG. He knows what happens when pensions get dumped. That's spooky. That's not good for the American people. Also, we are seeing a phenomenon increasingly. The age old saying, "The stock market is not the economy," is, in my opinion, becoming less true as more and more Americans pile all of their money into the stock market because they see it as the only way of keeping up with cost of goods, with inflation, with just the expenses that are getting piled on here to the I would say bottom quartile. Now I'd say bottom half of Americans. So so yeah, Talk, you felt dirty because you got a heart. you know Never feels good to make money off of people's retirement accounts. They're coming up on retirement and their 401k is down 20% because their financial advisor told them to go big into these hyperscalers and yada yada yada, whatever. Tale as old as time. Consolidation of wealth, right? So let's see. VRT, we talked about it briefly. Let's talk about it again. VRT, they make air blow in data centers. Probably they do other stuff too. I actually don't know what they do. I'm pretty sure that's what they do. Chart looks like that's what they do. Incredibly constructive on a high time frame. Um, find your spot, pick your spot, take a starter. Probably DCA in. This is probably a high quality one to have in your middle innings AI basket. I'm not in it. I wish I was. I love it. I think it's a great company. In terms of targets, pretty straightforward here. We look at this as I'm going to call it. It's not a very clean cup and handle, but we're going to call it a cup and handle for in the intents and purposes of we had a swing high, we had a big move down, we came up, we mitigated the sellers here. If you got stuck short here, I'm sorry, stuck long here, got bodied, well, just hold and pray, baby. Went all the way down to 54, but we're going to need this company in the future. It will have its day in the sun. Lo and behold, where does sellers step back in? Exactly when these buyers were made whole. These guys got out of Dodge. Now, what are they doing? They're saying, hey, I probably still like the company, but oh, that was close. Let's wait and see where it bases. Bottom wick, bottom wick, bottom wick, gap up. So now we got this curve going, right? There's like a little curl. It's a little tight cup, or sorry, tight handle on this cup. And we just get straight expansion. So what we can look for targets, Fibonacci extensions, and I would draw them like this. There's a few ways you can draw them. This is where I think it's kind of an art more than a science. I know Bulkowski will say you must do it like this or else, the world will end. I think there's a little more art to it. In general, the rule I was taught, left top of the cup to the bottom of the cup, expand upwards. I use log charts for everything, so I also use log fibs. They will be slightly different. In this broker here, I don't think we have access to that, so this is normal. But regardless, very clean levels. So the 138, maybe I should start using this one because that definitely tagged there and found a response. But the back test to the previous high, always a good look there, and nice strong response. So what I would say is this 161 is our main target, 220. What I would also do is draw fib extensions for this new smaller range. And I do it in a few different ways. So one, you could just do it from this to this high and look for a big move like that. For an immediate breakout move, what I usually look for is a move to the 1.27 fib, which would be right about here, which would align with our initial 220 target there. So I think that when you slap a couple fibs on a couple different ranges and you get nice confluence between key fibs, so this is the 161 extension of here, and that would equate to the 1.2 extension of 1.27 to be precise of this range. Why do I care about the 1.27 extension, you ask? Great question. Thanks for asking. It's because it is the level where statistically, if the range breakout is going to fail, this is a very, very, very common spot for it to fail. So it runs all of the bearish stops and then rejects if it's going to. I don't think it will, but very often it pulls back and back tests the 100. So always good to just trade around a core position on something like this, take some off there, wait for it to settle, buy some back, take some off here, wait for it to settle, that kind of thing. I like VRT a lot. I think it's a real good company. So what else we got? What else? Let me catch up on this reading here. Interesting take on SoFi. I think you're right. Talk is saying SoFi dumping shares. Asset-backed securities aren't looking good as subprime borrowers are falling behind on payments for student loans, autos, homes. How are we doing? I haven't been following like credit card delinquencies, that kind of thing. I mean, you're long Visa, so I guess you can't be too worried. How's Visa doing? Little Wyckoff spring action maybe. Bend it like Beckham on down to support and then rip our faces off. I could see that. I'd have to look at my oscillators. These are always gut checks, right? When they're just like drooping down like that. Is this a failed flag or is this about to go boom? Not sure. But what I do like to look for is historical analogs per chart. So charts are like people, I guess. They have personalities. Each chart has a personality because they are each managed. That market is managed by someone. Maybe it's not one person. I think for small caps, I don't work in Wall Street. I don't know the details completely, but I believe each desk will have certain tickers that they kind of market make for. So, I mean, not outside of the realm of possibility that their personality kind of gets expressed in the chart. Or maybe it's just a snapshot of the collective psychology of all of the people on the other side of the trade, not the market makers so much as the participants. Probably somewhere in the middle. Probably I need sleep and I'm just waxing poetic and sounding crazy. But regardless, when it does this kind of move and then pops like that, I'm more inclined to give it the benefit of the doubt that this type of move will be very similar. Because as I look at this, actually the structure of the flag very similar. We got a jolt down, come up in a little M, sweep that, jolt down, little M, sweep that. Then you start posting bottom wicks. Need one more sweep out, got one more sweep out, more bottom wicks. Quite similar. So keep an eye on that. Centene does government healthcare. Okay. So you are looking to short SoFi and Affirm. I think, oh man, I want SoFi to Palantir out, but maybe you're right. Affirm is one. So Affirm is one of those ones that's always been in my basket for this move, right? I actually didn't catch it. This move being, okay, we have a stage one base, call it a cup and handle if you want, but a stage one base that breaks out. I was watching this area here to see if it could hold, and it flushed, and I stopped looking, squeezed up again. To me, this is not looking like a super constructive chart. What I think is because it has been so just bludgeoned, I'm just not convinced that this is a fully developed chart. I think that it very well could be making a giant kind of scallop base where it comes up in the middle, then comes all the way back and needs to go like this. And maybe Affirm's time in the sun will be like 2028 or something. Very, very speculative. Who's to say going out, projecting that far? But that is what I could see playing out if this flag fails. Or maybe double top and fail, something like that. I get it. Affirm probably, yeah. Well, I mean, Affirm's got more room to fall. Upstart looks shittier. Worse. Apologies. I'll have to think about that. But I do like this. I do like this theme because I am looking for short ideas because I'm really bullish on stuff in general for into January at the very least, into March maybe. Visa makes money from the institution, not the consumer. Thank you. That's an important distinction. Thank you. Yeah. As opposed to Affirm, buy now, pay later. Absolutely. Don't take a hasty sell. You're too emotional. Talk. You are like the least emotional person I can think of in this conversation the two of us are having. Let's say that at the very least. Probably in this room. Okay. All right, I'm running long, guys. I'm just hanging out with the boys at this point. Come on in. If you got any more questions, any more charts, I will answer any more that come in the next 5 minutes, and then hard cap in 20 minutes. I'll get out of here and start my weekend. Let you guys live your lives. Duolingo short. Oh, I was looking to. That was in my. I was considering that for my bottom feed basket. I was considering bottom feeding this. Maybe I'll hold off. I might do it though. Talk. I might fade you. I like that it's coming in here and holding. I really got to look at my oscillators though and see what the longer term trend's looking like. Because for me, I'm thinking, okay, yeah, that's a mean head and shoulders, sure, but head and shoulders have what, like a 55, maybe 60% chance of actually playing out. We did get a play out. We don't need like a full measured move, I don't think. We could get it though. What would that look like? I got to turn my brain upside down to think about. I don't short very much, so I got to think about how I would draw this. I would go, I guess, from this one here, and then this is the break of structure here, and then this bear flag, beautiful, taps into this consolidation, pukes it, just straight shot, very nice, but holds this low and is finding buyers. It's a little appealing to me coming into the end of the year where people are going to be getting out of there. They're going to be tax loss harvesting these, and buyers who believe in it might come in. The shorts might get closed out. Those, I don't know. Maybe somebody is short a bunch of leaps or something. I don't know. I'm just saying things now. What I can say, I still like it. I'm not gonna lie. This is my toxic trait, liking charts that look like this. I think you're probably gonna prove me wrong, and it'll be a good learning lesson looking back. Okay, technician. Nice, thanks for commenting. KR, absolutely. You've got 63 calls for next Friday. All right, we gambling. Let's see what's going on. As with all of this, not financial advice. Don't shoot the messenger. I'm just a guy trading too. KR, is this Kroger? Who buys weekly calls in a Kroger? I like you. I like you. That's not an insult. I like you. I actually love playing short dated options in defensive stocks that have incredibly low IV like this. I'm assuming. I actually don't know how the IV is looking right now. Probably a little higher after that dump. So, okay, you're betting on essentially oversold, I would assume. Maybe you liked the earnings and think this is dumb. I see a curled top. You need it 63 or higher to get paid out on those. I don't know what your cost base is, so I'm assuming you're looking for in the money here. Don't like today's candle, to be honest. Let's look at the hourly. So, gut check. Is this going to put a higher low? Is this going to be a bottoming structure? Right now, we had big push down, swept out the range. We found liquidity here. Just because it bounces doesn't mean it's not a dead cat. What we would be looking for is price reaction once it comes up into some other key levels. Do we have any other key levels? Just kind of like, I guess this is a breakout area. Without having my volume profile here, that's kind of what I would think. Okay, we're trying to reclaim that. Fail once, fail twice. Let me pull it up on my other chart here. I'm just looking at some secondary indicators really quick to kind of give a better perspective here, so bear with me. In general, wouldn't be surprised if it came back, retested this zone with the wicks, caught and tried to sweep this. That would put you at 64. That wouldn't be bad. Those would be nice profits. I hope you got in at the end of the day. Didn't get yeehawed here. Then your cost basis would be nice and cheap, and I think you probably print even if you don't get the full in the money. That being said, defensives in general, like I'm not bullish on them. Doesn't really matter when you're just looking for an immediate move on weeklies, but I'm hoping it comes up and fills the gap for you, but I'm just not really sure. Let me look at my secondary indicators here and see if I see anything else for you. Okay. So, daily momentum on the oscillator, on my wave trend oscillator, it is losing the 50% of the histogram with a steep rollover, a steep bearish crossover on the hourly. That is going to be, I'm sorry, on the daily. So that's going to be tough to overcome. The hourly is also, since that midday pop and rejection, is rolling bearish. It is not super aggressive like the daily is, so we might see some rounding and some bottoming action intra week next week, early in the week, and a push up before the higher time frame momentum pushes us back down. I would say that for me, this is low confidence in either direction, but gun to my head, I think if you get traction, I think if you get 63.50, and definitely if you sweep into this imbalance, I would be closing, assuming you're profitable and all that. And this isn't just like a zero or hero gamble. Everybody manages risks on options differently. I personally just fire him out there. I'm like, if I'm betting this amount of money, the amount that the contract is. If I'm right, they'll print. If not, I will take whatever is left over. So that's how I manage my risk and options. If you have a bigger position and you will need to trim, like, yeah, when you're getting in this gap. Oh, I'm sorry, you can't see my other screen. I apologize. When you get into this gap, be wary, be wary. And I would say anywhere over 63.50, look for selling pressure, because that's where those 2 daily wicks formed. That's what I'd say there. Hope it works for you, because those trades are fun. All right, glass half full saying the market has rebounded from that dip. We are back near the top. Do you think that we will start to dip around the 10th or maybe even the 20th of December? So for me, I am more driven by levels and price action and like gamma exposure, stuff like that, than I am by the times, unless it is like, gamma exposure is big for 1 week, not for another, something like that. So in general, I would say I don't think we have a serious dip until we transact 700. I think that we are in buy the dip mode until then. Around the 10th or maybe the 20th of December. Let's look at SPY and think that out a little bit. What would that look like? I do think time cycles are important. And this is an area that I'm just dipping my toes into in terms of time cycles, Fibonacci cycles. There's an amazing analyst, +3 or 3+, I forget. It's Ben Maldonado. He's a really, really smart guy. Follow him on Twitter, follow him on YouTube. They are really big on cycles. Gann cycles are one. I think that's like 90-day increments. Those are important. Those also represent a quarter of a trading year. So good stuff there. You can watch those cycles, and over the weekend, I will look into some of those cycles. And if I see anything, I'll let you know on the Monday stream. But in general, I'm less worried about the time we dip. It's just a weird daily candle, right? It's really, for me, it's a gut check. It's like, this doesn't look bullish here, but everything else seems bullish. I think maybe we might revisit 677 or so into next week and then push for the all-time high. We're so close, though. We might eat the wick, sweep the high, and then come back and fill some of this out. In general, just 690 is going to be a wall, so it wouldn't be surprising to me if we have to push down a little to kind of get the juice to push back above. Intraday, anything can happen. So I will continue to be scalping without a heavy directional bias intraday. Still biased up. For swings, I'm buying dips. That's where I'm at for SPY. We'll have to kind of see how the month progresses. Kroger just cut a lot of workers and got punished on earnings. You're losing your 82 cents? Oh no. I hope not. Not financial advice. I could be very wrong. Not a chart I have really high conviction in either way. So send it, brother. Hope you make your money. All right, guys. Last chance here. Last chance here. If anybody's got more for me, I am here to serve. But then it'll be time to relax because this has been a stressful week for me. Good to see you, Talk. Have a great weekend. Going back and seeing if I missed anything. Oh, NBIS. I missed that one. Glass half full. If you're still here, we'll take a look at that. Probably to wrap it up, unless we get any more. I like NBIS. I think that it has a lot more to go. I think this is one of the ones that you can actually say has a lot of fundamental reasoning behind why it should be higher. The deal, I think it should have probably gone even higher. I think it's probably worth like 150 to 170 or something, just based on that, how much market cap it added. Again, I'm not a big fundamentals guy, so I just look at the technicals primarily. We got the boop, boop, boop M pattern. We tagged into the gap. We found buyers there. We also, I believe, okay, we didn't quite mitigate this. So see how it didn't quite come back down there? That would be a good enough mitigation of the gap because there's no area of the tape that hasn't been traded over at all. That being said, the full one would be all the way down here. Either way, it looks like we didn't need either of them. You could entertain the possibility of this being a bear flag. That's the only thing that could rain on this parade and knock you back down to 66. That being said, I think it's more likely this is carving out a sloppy little base here. And it's going to tag up into here. I bet if we looked at the GEX chart, there would be some nodes at 110 and 120. Just based on these being very clear pivot points. You see a lot of price interaction at this point. It gaps above it, tests it, pushes up, gaps below it, gaps above it, tests it before it gaps, back test before it drops. So this 120 level, very important. There's definitely going to be a big node there. I would anticipate there's a big node at 110 too. Decent pivot here, flagging, tried to hold, consolidated into it before it dropped. So those are the areas of interest. You could run probably a pretty tight stop on this because if it starts rolling, it'll start collecting stops here, 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 here. We call it a low liquidity run where it can just boop, 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 very quickly fall down the target. And that is the idea that we see on a progression like this leg up. Once it loses this low, floodgates kind of open and it just bottom falls out until it finds an actual base. I'll give you another example. I'm sure we can find one. There's a good one. So we push up like this. Once we lose this here, gap below, kind of holding on, but it just wants to sweep these stops, and then it's powering down to sweep these stops, then it's powering down to eventually sweep these stops. And once it did, that's when it kind of started basing. Eventually it needed to come down more. But regardless, that's what a low liquidity run looks like. That's what we don't want to see. I'm not sure that that's what this is, though. This is looking compact enough and tight enough that it could very well be a little double bottom base. So I think that it is still one to. There's a few data center names that I like. I like for investments. I like NBIS. I like Wolf, WULF. They look very constructive and the fundamentals seem to be there. Again, not an expert, just leaning on the people I know who know a little something, something. This isn't Wolf. Where's my Wolf chart? Yeah, this is my kind of chart. So you got the stage 2 breakout, and now it's consolidating in a sign of strength. This is basically a wick off pattern. I think. We'll see. I really do like this one. This is one of my favorites. IREN, the leader, and currently lagging. They diluted on one of the first green days they had, which I always think is funny. I think that was the dilution, and it started to get eaten up already, starting to double bottom. Let's play the fib game. Is this the 6-2 fib? Let's find out. Whoops, got to reverse it though. Looks like it's the 50 fib. 50 fib there. So yeah, 6-2 is right there. Okay. So I guess this is probably a sloppy place to drop from. Could do all the way at the bottom. What does that give us? Yeah, then it's the 6-2. Oh, whoops. You get back there. Okay, yeah, that looks good from the actual true bottom. Sometimes the fibs are more responsive if you like do them like right where it started, like actually surge. But in general, low to high, good rule of thumb. Double bottom right off the 50% fib there. So that is telling us that in this whole expansion, if you are like waiting for a range to form, then you're buying. So far they're buying the second it went even a penny on sale. So think about it. Here's the range. Fair value is right in the middle. Under it is on sale. Over it is at a premium. So I like this one. Keeping an eye on it. I have a starter. APLD. This is one of the ones I'm most bullish on fundamentally. It kind of ran away from me though. So I'm hoping that this is going to be a W. Boop, boop, high or low. Somewhere around 25 get involved. Then big move 40 and way beyond. Way beyond. Because look at the long-term chart. This thing is in rippy mode. This is the first big pullback after it's started to go parabolic. So assuming that we can sweep the new high and make a new high, this becomes a 3-month flag, bull flag, extension flag. And your measured move would be disgustingly big. We're talking 100 plus. Not 100 plus, I apologize. 60 plus, though. 100% plus. All right. Looks like it's like no more questions. I'm going to take my leave before y'all drop a bunch more. Don't worry. You know where to find me. If you liked this, I am streaming every power hour from Monday to Thursday. So you can come and find me right here on Trade the Pool. We'll be doing live trading, live streaming, tape reading. We'll take requests on tickers, all that good stuff. You can see how I trade in real time and how it's not always as clean as my analysis. I'll be the first to admit I'm an analyst first, executor second, but getting better. If you like that, you can come on find me at the last hour of the trading day, Monday through Thursday, like I talked about. You can find me on Twitter at Steve Tileman, SteveTeilmann. I have not been posting recently because I'm spending all my time in the Discord. You can find that in the bio. It is free. I do a paid service. You can read about it there. I will not shill it here. That's where you can find me. Come on in to Trade the Pool streams in the morning too. We got a great morning show with Big Money Mitch and Michael Noss. We also have some great call-in shows. I forget the exact time. I believe they are midday. I want to say Wednesday. Check the Trade the Pool Discord to find Josh's show and Kevin's show as well. Excellent minds there. Really good team we've got here. So make the most of it. Have a great weekend, guys. Take care of yourself. We are going to be back first thing Monday morning. So take care.